Those seemingly robust, but the share price falling by more than 7%. Earlier, my colleague Colin spoke to DRD Gold CEO Niel Pretorius. Let's take a listen.
Our production was slightly down by 4%. Our costs were also slightly up. But because the gold price was very strong this year, especially between December and March, we made 25% more in net profit and also in free cash compared to last year. So the financial results of the company were really good. We have more than a 500% increase in our dividend, and our share price also responded nicely. Our share price was up just over 230% for the year, 400% up until now because there were some subsequent events after that. So on the whole, it's a satisfying year, looking at it from a shareholder perspective with aggressive dividends and good share price performance. But I think it's going to be demanding of us going forward to make sure that we get a handle on, maintain a good handle on costs, and that we keep an eye on production as well.
Well, given the robust gold price, especially in the period that you have alluded to, given that gold has been used as a safe haven, and then the next moment you see that gold is at the level of $800 per ounce. At the moment, what are you doing to maintain sustainability in terms of output costs?
Well, we don't hedge at all, and it's as a consequence of that I think we were able to take advantage of a much higher gold price this year. Our revenues were up significantly, and we made more than 300 million in free cash. Considering that our market cap was 700 million last year, it's almost half of market cap in free cash in 1 year. But that is as a consequence of our hedging strategy, which is we don't hedge. Obviously, that makes us vulnerable to the downside, but that's where your discipline with regards to costs and also taking a conservative point of view of the gold price going forward for capital allocation and capital investment is concerned. That's where that comes in.
Now that the company has embarked on a cleanup operation, is that not going to push up the cost in as far as production is concerned?
Won't affect our balance sheet, other than that we can remove one provision from our environmental cleanup provision from that, and what that number is, I don't have the exact number at this point in time. That is the tail end of a mining operation where we are basically now hitting red soil, so the mine dump has been mined out, and we've decided that we will clean up the site in its entirety before we move on to the next site, because we are in an environment where the gold price is still healthy, we are still maintaining healthy margins, and we have a diverse enough footprint for us to be able to absorb that going forward. And of course, we've got something to look forward to come January, February next year. That site will be clean, and there's another site which has already been completely developed that is standing there waiting. The pump stations are there, the pipelines are there, and we'll be able to hit that site really hard once we come off this site.
How far is the company regarding wage negotiations and the impasse that was created by that kind of cut and paste demand of 12,500 rand, as similar to the platinum sector? Have you reached any agreement?
Look, our labour force is more an operator type employee, so we don't have, I think, the large lower category levels that some of the underground mines have. Our cost to company, in fact, is quite a bit more than the 12,500 that's being demanded. Although the cash out is not that amount, if you add the pension benefits and the medical benefits and allowances and so forth, it takes it quite a bit beyond the 12,500. We were very pleased with how our wage negotiations were completed this year. We managed to reach another 2-year wage agreement, something that we feel very strongly about, namely home ownership has now also been introduced with a 70,000 rand per employee, qualifying employee, a benefit that's being negotiated, and that we'll be able to make it available to employees. That was part of our wage package this year by way of a loan, and we're very comfortable and also very pleased that we can look forward hopefully to another 2 years of labour harmony.
So you're not looking at any kind of retrenchments now?
At the moment, we are moving off some sites, and we do provide an opportunity for employees to take a voluntary retrenchment, because these are site specific, but not major wide-scale retrenchments. Remember, our labour force is only about 1,000, and at any given point in time, we only have about 250 employees deployed at specific sites. It's a quiet business that is not labour intensive. So withdrawal from sites doesn't have the impact that you may find in the underground environment, where a shaft closes and you have 5,000 employees whose jobs come under threat.
Thank you very much for taking time.
Thank you very much. Thanks for the opportunity.